Hello friends, and welcome to Big T's 3-Minute Market Minder. Right now it's 1 a.m. I'm in Portugal. In a few hours I have to get on a plane and head down to Miami and then up to Palm Beach for our third Infinity Conference. Really looking forward to it, but I wanted to get a quick 3-minute Market Minder out to you. We just found out earlier today that Trump is now our president, President Trump. Congratulations to him. What I told you over the last several weeks is that it doesn't matter who wins the election, that we would see gold prices rise regardless whether Hillary came in or whether Trump came in. And I said again that it would be highly unlikely that we would see the Federal Reserve raise interest rates in December. And now what's happened? Well, we saw gold spike up well above this 1,300 level. It's come in a little bit here, which is absolutely normal because it got so overbought. And you're going to see it gun up again. And one of the reasons why it's going to gun up again is because, lo and behold, now Wall Street's waking up to this idea that, maybe it won't make sense for the Federal Reserve to hike interest rates in December. And if they don't hike interest rates in December, again, it's extremely bullish for gold. Now, as I said before, I haven't changed anything that we've been doing across all of our portfolios because it does not matter who is in the White House. Okay, the equity prices are going to go up based on the fact that interest rates are so low, and interest rates are going to stay low for a somewhat extended period of time. And that's bullish for equities, but it's incredibly bullish for gold. And so gold is an asset here that you can continue to buy. It will continue to do well. And over the short term, here's my call, is that gold will continue to catch a bid, but the gold stocks might lag physical gold prices for a month or maybe 6 weeks. It could be shorter than that. It could be a couple of weeks. And the reason why I think we'll see that is that I think Wall Street is still looking at gold as just purely as a chaos hedge. And in their mind, they'll say, okay, we had some chaos, gold rallied, and but this is going to be a short-lived thing. And it's not. Wall Street is not understanding that we are at the beginning of a longer-term move higher in gold prices based upon something called negative real yields. I don't have the time to get into it here, but I've written a lot about negative real yields. And a negative real yield is the rate of return you get on your bond after you take into account the rate of inflation. And when that's negative, or even when that trend is down, it doesn't even have to be negative, just that trend has to be downward, it's incredibly bullish for gold. Okay, so with the fact now that the Federal Reserve is probably not going to raise interest rates, with the fact that Donald Trump is probably going to engage in just massive deficit spending in order to try to boost this economy, we are going to see a surge in inflation that is going to catch the whole country flat-footed. They're not going to be ready for it. And when it hits, it's going to cause gold prices and, of course, gold mining shares to absolutely skyrocket. They're going to gun because nobody is prepared for this trade, right? If you look at the way the whole of Wall Street has their books, their trading books stacked, nobody has their trading books stacked for a return of inflation. And you know as well as I do that the market goes in the direction where nobody is looking. We saw that proved just over the last 36 hours with the way that this market traded. Everybody thought Hillary Clinton was going to win. When it looked like Trump was going to win, the market crashed. And then everybody woke up and realized, hey, it's not the end of the world if Trump becomes our president. He's probably going to engage in a lot of stimulative spending, which is ultimately good for equities. And then equities just completely gunned higher. That stimulative spending, married with the fact that the Federal Reserve is not going to aggressively raise rates, is bullish for gold. Very, very bullish for gold. All right, friends, that is enough out of me. I will have more 3-minute market minders for you next week. And for those of you that are going to be at Infinity, really look forward to seeing you then. All right, friends, again, that's enough out of me. I want you to always remember, let the game come to you.